to another daily dose of insights powered by Container Exchange. My name is Christian, and every other day we bring to you the key news, stories, and data points that move container markets and hence your business. What a crazy week this has been, particularly on the macroeconomic side, with both the Fed as well as the Bank of England raising interest rates by 0.25 percentage points. This is amongst fears of a collapse of the global banking system on the one hand side, incentivizing policymakers to keep rates low or at least halt the increase of rates, and of course continued pressure on the inflation side, with particularly services inflation now being more and more sticky, or showing signs of being more and more sticky and less transitory. So policymakers have a push or incentive to keep increasing rates to keep inflation low. And that inflation is a real concern. We also see on the ocean side. We said it previously now that continued inflation pushes us operating costs, pushes up household costs as well. And that incentivizes or pushes people to go on strike, to have labor disputes, to keep pushing for increasing labor rates as well. And we see that right now in Hamburg, just around the corner from where we are based, with Verdi and the other unions are going on a warning strike. So more than 2.5 million people that are employed in the public sector are going on strike, or at least on a warning strike. And this also has impact on the port of Hamburg, with the pilots being out, and hence no container vessel being able, no container vessel or no vessel that needs pilotage being able to leave or enter the port of Hamburg. This has been going on since Wednesday, and of course causes significant disruption on that side. Also, we see the FMC, the Federal Maritime Commission, increasing rates significantly, with, for example, the cost to apply for freight forwarder or NVOCC license going up by more than 400% with the newest rate sheet that was just published. So costs are increasing across the board, particularly also for freight forwarders and other ocean participants. On the good news, just published yesterday, new figures by Alphaliner show that more than 6% of the active cellular fleet or cellular container fleet is idle at the moment. So capacity is being removed more and more stringently now by the big carriers, with Maersk Line leading the pack, so to speak, in removing roughly 6% of its TEU capacity. So carriers are making a push to reduce capacity, to prop up rates, in order to lessen the margin pressure on freight forwarders or ocean freight providers. That is being introduced by a decrease of rates and an increase in OPEX. So that's it for us for today. Have a very good start into the weekend, and see you all on Monday. Take care.